Aloha and welcome to Java. Thank you everyone for joining me this morning. This is for Tuesday, January 9th, 2024. So we've got a relatively level day from the looks of it. Our favored risk indicator, the MMRI, is just barely above 257. So while we're still in the high risk territory, it's remained stable for pretty much this past week here, a few days. So not a lot of volume or change here. So the main elements, relative strength of the dollar and the 10-year yield, are both hovering right about the same level. That's allowing the markets to run a little bit. So between yesterday and we do have markets are in the green, as we were talking about. Futures are a bit mixed, so that will keep it in check. But the current sentiment is green and consolidating. So expecting a few outliers, but for the most part, kind of a quiet trading day. So we've got this one saying the morning bid is saying that Wall Street refines its mojo, meaning that it's in the positive range, but that there's hurdles ahead. So we don't see those quite yet. And just a reminder that if you haven't had your coffee yet, we've got Indian coffee exports set to surge because of having a price rally right now. So be welcome to Java. We'll have to move to tea. So in our calendar, we don't have much going on today, to be honest. We've got exports and imports and a trade balance. So those are in the macro, but I don't expect anything that would be moving for today. Tomorrow, crude inventories and the 10-year note at 1 o'clock. So that one we'll be watching. That's our 10-year yield. And then we are watching also the Fed has a couple of speakers, Williams in particular, at 3:15. So whenever they need to manage the market, has nothing to do with the real economy or the real numbers, but it's what they say and how they move the market as to whether they're going to cut rates and when. So we've got $34 trillion United States and national debt, talking about the boiling frog scenario. This hasn't been faced yet. And now there's more stimulus coming out. This is from a JP Morgan Chase strategist. So we've got more deficit spending. They're talking about, they came to a bit of an agreement for the debt ceiling. So it looks like a shutdown will be averted, but that will come with more profligate spending. Just it's going to be inflationary. Long term, it's inflationary. More war spending, more Israel war spending, more Taiwan. So we've got this on the real economy back in the United States. More and more Americans getting stuck in that cycle of credit card debt. So these numbers that they're talking about, new report by Bankrate, 49% credit card holders don't pay them off each month. And so the average credit card rate percentage they're paying on that debt is 20%. That's an average. That means that it goes upwards. I've seen 29% on credit card debt that people are carrying. So keep in mind, this is credit cards. It does not count in what we've been talking about, the BNPL, buy now, pay later. So, and we've also got banks that have kind of done the same thing. Bank of America, they're taking a hit, $1.6 billion on their short-lived rate. So basically what they were trying to do, they gambled on the rates, making a move, and when they borrow and the rates actually drop, they lose money because they have to lend out money at the current rate. So if they're borrowing for more than what they're lending out, which is what happened with Bank of America, that's how they're making huge losses. Another area that I've been kind of talking about and trying to bring up is insurance. So this is talking about home and auto insurance in particular. It's raising rates, and so it's also causing some issues in the markets. But what this is doing as well, especially specific areas, Florida is one of the ones that is moving in particular. Homeowners insurance is causing serious issues, and it's going to rock the housing market because if you can't afford, this is aside from the price tags on the homes of the vehicles, but you can't afford to drive them on the roads, and you're not allowed to drive without insurance. You can't have a mortgage on your house without insurance. So basically what this is doing is this is pushing people who need loans to own these out of the market, and then all of your cash buyers will flood in. So we've got JP Morgan Chase is the leading bank, and they are making 5 times what the rest of the banks are. They're just a behemoth, literally too large to fail, and they're going to clean up in this next, uh, whatever you want to call it, whether it's a depression, a crisis, or whatever, it is coming. There will be a correction, and JP Morgan Chase is one that is going to benefit from all of this. So this is talking about housing sentiment jumping as nearly a third of Americans believe that mortgage rates will fall in the coming year. As we were talking about before, current mortgage rates are right around 6%. But buyers are not exactly purchasing quite yet. So what they're doing right now, the first ones, are refinancing to pull out value. Since people think that the rates are going to drop even further, they're still holding off. So as we were talking about before, it's going to have to hit somewhere around 5% before it will spur a large number of buyers back into the mortgage scene. And the price tags don't move it nearly as much as the interest rates. So we've got this story as well. I brought this up before, but I had someone that kind of was questioning me on this. So I wanted to bring this up. Parents spending their retirement savings to help their children. So with all of this inflation, the difficulty with jobs, wages not keeping up, a lot of children have moved back in with the parents. So this is saying about 70% of parents with their adult children have basically made financial compromises and in the form of pulling either from their home mortgage or dipping into their savings or also their retirements. So this whole article basically is warning to parents to stop sinking their retirements basically or cleaning them out for their kids. So changing to a different view, the macro view, we've got Italy calling for a European army, quote unquote European army. So why this is significant is because of the comparison. So they're trying to put the EU as a bloc so that they can compete with the United States, Russia, and China. And the wording of this, if you'll pay attention here, says European citizens can only be protected by something that already exists, and it's called the European Union. But they're saying that in order to bring peace to the world, they need a European army. So we all know that it's basically the currency that is backed by the military is what gives it its strength. So we've got the EU looking to do something of that sort so that they can compete on the big stage. So more in the macro news, we have this story from Bloomberg talking about Beijing. So they could trigger a global war, but listen to this craziness. They're basically complaining, talking about how China can get ahead because they're supporting their economy to buffer for the real estate crisis. They're actually manufacturing. And we've spoken about this before. In order to have a real GDP, you have to produce. So China is one of a couple of places, I'll go over the other one in a moment, aside from India, that has actually turned to manufacturing and producing goods as well as materials. And they're trying to purchase up steel plants from the United States as well as other areas. So they're getting ahead because they're actually producing. So moving on with the other side of this is actually Iran. So they have become the second highest in economic growth over this past year. And the story is talking about how they're now into power and electricity generation. So they have also kind of upped their game, so to speak, if you want to say, between nuclear. They're looking at more with weapons, but also with energy. They have apparently a national steel festival. I'm not into this, but they've got a steel festival in Tehran. And so they are producing resources. They're talking about how much they have produced in car tires. They're producing tires and steel and manufacturing. So if that sounds familiar, it's because that's how the United States pulled out of World War II a long time ago. And what made the United States great for a long time was that production, industrialization, and actually producing. So there could be the plot twist here is the artificial intelligence angle. However, we are watching these quote unquote real products are moving out of the United States. So, but that's what I've got for you today. I'd like to remind you, live, trade, and think outside their system. If you haven't already, to like. Thank you so much for being here, and until I see you again, my friends, stay free.